Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions bored of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we take a look at how the market trade wrapped up on Thursday, we'll call it relatively soft, lower action minus the soybean meal market. That screamed higher again on the day Thursday. Still getting a little bit of a reaction to Wednesday's WASDE report, much more. Here to walk through the markets with us, our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing here today. Bryan, good to catch up with you, sir. I hope you're doing well.
Hey, Jess, we're doing real well. Maybe not as well as the markets. Kind of disappointing in the corn market in particular, with the front month coming under some pressure. Had USG report this week, so those have been big reports. We saw in January some pretty big surprises on harvested acres, so the market may have been sort of anticipating maybe we'll see some more. And the way basis levels have been in the U.S., there's this underlying sense of what are we missing? Why is the cash market so strong when exports have been so slow over the year? And so is there just less corn out there? Are farmers hanging on to it? Or have they sold a lot to commercials and commercials are hedged on it and the market's holding up? So there's a lot of questions that may be answered, but today wasn't the most healthy day. I'm going to make the argument that the Bears really didn't get the news they wanted yesterday, but the Bulls didn't either. So all else being equal, you got to feed the bull. Looks like we did not feed the bull today.
I was going to say, we've seen this the last couple of days after a WASDE report. And just as you mentioned, we didn't really feed the bull. The Bears didn't really get anything either. Just it feels like there's no conviction to go one way or another here. Traders are just kind of just dancing around this market right now, Bryan.
Yeah, it's a really tight range, and the more it trades sideways, sort of. And I know from sitting in the chair of someone who places orders that the market just doesn't seem to have a lot of new news or conviction for anybody to really take action. So the market moves up a little bit. Traders likely are selling the rallies and then buying the dips, and it's a sideways trade. Ultimately, we have to, remind ourselves that from a historical perspective, prices are in the higher range that they've seen over the last several decades, and that if supply increases, there's a likelihood that there could be additional downside potential for price in the future.
Now, I know on the WASDE report, we did see a cut to domestic crush, and I know we have the Argentine concerns with their crop. The one market that stood out to me on Thursday was that bean meal market screaming higher again. Was that maybe a delayed reaction to some of what we saw on Wednesday's report? Was there something else underlying in that market that you saw on Thursday that caused the big move to the upside?
I don't think there's anything underlying the market different. What it reminds us is that supplies of soybean meal are not only snug, but they're expected to remain snug for some time. And if the U.S. is crushing beans at a favorable pace to develop or to crush beans, the opposite then is on the other side of that coin is oil. And that's been a very, let's say, sluggish market, sluggish to sideways. So it's a different story than a year ago. If you might recall, we were talking a year ago almost every week about tight world vegetable oil supplies. And, the world's got some struggle with that, especially with drought in Brazil. Last year at this time, we were talking about declining yield potential in Brazilian beans. This year, that's not the story. And harvest is, while delayed, it's coming along. Bean market has kind of a tough road ahead of it. It struggled. It looks a little, to my thinking, it looks a little tired because it's rallied and falls back. Same thing with corn, rallies, fall back. Didn't like the kind of range in corn prices in the close in March corn near the low of the day. So meal's still strong, but corn seems at best sideways. Soybeans appear sideways, unable to really crack higher and put some enthusiasm in the marketplace. So I'll finish up on the beans saying that, with that being said, and I'd say the same thing in corn, the theme that I want to sort of relate what I've heard from producers, and it's just, statistically, don't take it to the bank. It's not a good representation. Your stats teacher would tell you that in college. But in my conversations with producers, it seems like they have been, probably because prices higher, a little further ahead with sales this year. And so when we get some up in the market, it seems like they're rewarding that.
On that corn market, I know you mentioned exports a little bit ago. I know corn exports on the weekly report near the high end of expectations. But then again, I look at the marketing year to date, still lagging. This corn market, I'm a little concerned with just how range bound this corn market has been, Brian. What's your thoughts, what you're seeing here throughout the corn trade a little bit more?
Yeah, great question. Good observation on the exports. So today's figure at 45.7 million, not a poor number. But last week, I believe the number was 62 million. I know it was north of 60 million. So it's still down from last week. And that leaves that kind of that concern that, well, we had one really good week and now we're kind of back to a mediocre week. But year to date, looks like cumulative sales, 1,054 million. And last year at this time, we were right at 1.8. So still lagging last year considerably. And again, I want to highlight that that doesn't necessarily tell the whole story. And what I mean by the whole story is that export sales, think about it, that's somebody buying a high priced product. So if they feel there's a chance for more supply later, they're paying a high price now, you're likely to see less upfront buying. So the last 2 weeks may be reflecting that as countries need more inventory, and it's a while before Brazil can really supply their buyers. We might see continued exports and those export numbers move higher. Yet at current prices, the question whether or not that's enough, unless they're just really stellar numbers, and we start seeing on a weekly basis, let's say 80 or 100 million or some large numbers like that we just have not seen this year at all. That's really the disappointing part of the whole export activity, is we didn't see the front load of big numbers and big sales. And that's what high prices do. They create a different behavior in buying. It's no different than you. If you're buying something that's cheap, you might buy a lot ahead, especially if you think the price can go up. If it's expensive, you really buy probably what you need and then see what next week brings and continue along that path.
Brian, I'd love to get your perspective on this. I know in front of us now, we'll have a March WASDE report. We'll have the acreage intentions coming up as well. I think about spring planting here in the U.S. is right around the corner. A lot of talk what that acreage battle is going to be: corn, beans, spring wheat, etc. We look at fertilizer prices. That's going to be a big part of the equation. I know nat gas has been coming down in price. What's your thoughts as we kind of start to get a few weeks out here from thinking about spring planting here, and just what this acreage battle could look like and how it could all play into the markets here moving forward?
Yeah, so natural gas price is an ingredient in a lot of fertilizer, down nearly 50% in just about 3 months. So that's big, and urea prices have been kind of nosediving as well. And so those who didn't buy ahead are feeling a little bit more comfort that they'll get things cheaper this spring. I'm not hearing any availability issues. Those who did buy ahead this fall, a lot of farmers that have relayed to me their rationale just said, look, we made a choice. And so that puts them in a little bit more of a pickle to probably be defensive new crop prices and avoid losses, more so than maybe the person who hasn't purchased that fertilizer yet. But nonetheless, you're looking at market inputs that appear to be on the way down, and consequently longer term probably means less stress to farmers. On the other hand, you're not likely to see rents come down this year. You're not likely to see any machinery equipment costs come down. Parts are still hard to come by. So you're getting some segment of maybe the input, but it's not across the scale. And I don't know. History probably has not been necessarily kind to, let's say, machinery prices all of a sudden declining a lot. Rents can come down, but probably not the machinery and equipment.
Well, I think as well that just echoes into the sentiment that we've talked about, for months on the show here. We always talk about it: risk management, proper risk management, especially heading into spring planting, knowing where your break evens are, sharpening that pencil is just super important, Brian.
Well, it's really good to know your numbers and then give yourself opportunities to explore the different tools that you can utilize. So in my position, one of the things that I do is help farmers look at the different tools and then explore them so that they can make good decisions based on what's available to them and how to implement. So it's that time of year where, if you're going to invest some time into something, obviously you want to prepare for spring. You're doing all of these things, but take a little more time this year at higher price levels and have those conversations that might give you some edge as to what you can do and sort of pre-plan so you're prepared whether prices go higher, lower, sideways. In particular, if they go lower, if you've done things to sort of defend or guard against that. You're trying to defend and guard against the livelihood not only of yourself but of your operation and family. And so investing time is a real big component.
Brian, how about in that livestock trade on Thursday? Looked kind of steady to lower there. I know we're waiting to see what happens with cash cattle activity. Export sales, beef and pork were okay. Nothing really jumped out at me there. What's your thoughts on the protein sector as we near the end of the week?
Well, 160 plus cattle on all the futures contract. Well, at least on the February and April contract, and then you get to October and December, a little bit weaker, around 160, a little 160 in the live cattle contracts. What do we think? Well, we made this argument that we think from the supply side, all else being equal, when you have less cattle, you have less supply, same number of consumers, everybody's buying the same amount, you should have higher prices, right? That puts upward pressure. But with inflation and just general economic concerns and many consumers saying, well, yeah, maybe I've got a pay raise, but I'm still running behind where I was 2 years ago or a year ago. When you consider inflation, I'm always concerned about how demand gradually seeps out of a market. People look for different choices. So that's my concern in the live market. We've probably seen that concern echoed in the hog futures lately, how they took a big spill in turnover, and that the trade just believes that, hey, high price hogs isn't going to generate higher demand. It looks like we got too far, we as in the market got too far over its skis relative to the cash index price. Cash didn't move. Futures had too much premium and pulled that back. And then when we look at the third kind of leg, I'll call it the dairy industry. Really nice rebound today, 27 to 41 points higher. That's a market that's been beat up pretty hard again, anticipating more supply. Traditionally, the dairy industry is one, Jesse, where when prices move lower, human nature kicks in. And what do you do when prices move lower? You work harder, you produce more. So that can compound the problem. So we've seen that play out a little bit in the most recent couple of milk production reports. A few more cows, more efficiency per cow, more production in a shaky economic environment, especially China, our importing countries. We've seen that come home to rest in the futures market with lower futures prices.
Brian, great thoughts as always. Before we wrap it up today, anything else you want to mention? Anything else on your mind here today?
I think I'm going to stick with the same theme that I encourage producers to pay attention, ask good questions, look for the right tool for the right risk tolerances. You're going to get busy enough very soon. You think about it. If you're down Texas way, you're days or weeks away from planting. So by end of February, we start to see kind of that Northeast Texas, Louisiana start to go at it. So we're not very far from the planting season starting to gradually kick in. Also, we're seeing some more moisture in the Midwest this week, so we might see the market. Maybe we saw some of that today. Maybe take a little weather premium out.
Very, very true. Well, I know if folks have questions for you, they could reach out to you very easily. Phone call, email, check out the website. A lot of great ways to get in touch, isn't there, Brian?
There is. I'd ask first with a phone call, 800-334-9779. If you want to shoot me an email, it's Bryan with a Y, so Bryan at totalfarmmarketing.com, or look at our website, totalfarmmarketing.com, and we've got a lot of resources on there and ways to connect with us.
Fantastic. With that, Bryan Doherty of Total Farm Marketing. Always a pleasure, sir. Have a great weekend. We'll talk to you next week.
My pleasure, Jesse. Thank you.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.